ServiceNow is down roughly 60% from its all-time highs, and a lot of investors are worried this story is broken. But combining the charts with the fundamentals and the recently dropped earnings report, this looks like a high-conviction setup. Stick around. I'm going to walk you through both the charts and the earnings beat, raised guidance, the AI tailwinds, and exactly where I see this stock is going next. Let's dive into this one. First, a quick reminder what ServiceNow actually does. It's the AI control tower for the entire enterprise. Their platform runs workflows for IT, HR, customer service, security, finance. Basically, anything needs to be automated and connected. They are not just another SaaS company, they are becoming the system of record and action for large enterprises, and AI is supercharging them. ServiceNow powers 85% of Fortune 500, boasts a sky-high 98% renewal rate, and processes an incredible 95 billion workflows. The Q1 26 earnings were excellent. Subscription revenue up 22% year-over-year. Total revenue beat estimates. CRPO also up 22% year-over-year. They raised full year 26 guidance, and the AR revenue target increased to $1.5 billion. But look at this big picture view. Revenue just keeps climbing higher and higher, but the stock price has been absolutely crushed. This is a good example of a strong company, big stock price setup. The fundamentals of the company is looking strong. The revenue has grown steadily. The operating margins and the net margins are expanding. The valuations are cheap compared to historical averages. Cash and equivalents have grown massively while long-term debt remains very manageable. And the earnings per share continued their strong upward trend. Real customers are already seeing massive AI results. Booking.com achieved 97% routing accuracy with their AI agent. Long-term, the management is guiding towards 30 to 32 billions in revenue by 2030, basically doubling the company again. Valuation has compressed hard after the sell-off, making this one of the most reasonable entry points for a high-quality AI growth compounders in years. And now let's talk about the charts. Let's start with the monthly chart, which shows that ServiceNow from its IPO has completed a clean impulse wave. The move was contained by an ascending parallel channel. This Elliott channel was first tested in April 2025, and the breakdown finally happened in December 2025. The drop was contained by a corrective channel, and the price is right now at the lower trend line. It's also worth noting that the RSI has reached the classic oversold zone and the lowest that it's ever been, while price remains above the key support zone of $70. Now let's zoom into this daily chart. The drop is looking corrective, and wave C reached the ideal Fibonacci extension level of 1.618. Now let me show you why this is important. This is a typical zigzag pattern in the bullish trend, and this is a typical zigzag pattern in a bearish trend. As you can see, they are all contained by a parallel channel. The zigzag pattern tends to have these common Fibonacci ratios between wave A and wave C. Do you know why this is important? Because if you compare the idealized zigzag pattern to the impulse wave, you can see that they share a common path, but only until a certain point. As you can see, this Fibonacci 1.618 expansion level is the maximum a wave C can reach. This is where the bullish and the bearish patterns are diverging. So this is why I think that this accumulation phase right here now can provide decent bullish opportunity, because the bullish and the bearish scenarios share a path up to the $127 level. These are my low time frame targets based on the Fibonacci extensions. For the markets to reach higher prices, first needs to make a clean breakout of this downward channel. If it does, then 165 is my next target. So what do you think? Is now a good buy here, or are you waiting for lower levels? Drop your thoughts in the comments. If you want more videos like this, click that like button, subscribe, and turn on notifications. Thank you for watching. I see you in the next one. And remember, it's all about probabilities.